Hey everyone, and welcome. Today, we're going to tackle a subject that's at the very heart of international trade, the letter of credit. We're going to focus on a really important set of rules called UCP 600. Think of it as the official playbook that banks all over the world use to make sure transactions go smoothly and everyone gets paid. So, if you've ever felt like these deals are kind of complex or even a little intimidating, don't worry, you are in exactly the right place. Here's the thing. At its core, a letter of credit is all about a promise to pay. It gives both the buyer and the seller confidence. But what happens when the paperwork isn't 100% perfect? What if there's a tiny little error? Maybe the goods are described slightly differently, or a date is off by a day. Does that mean the whole deal just collapses? Well, that is the big question, and the answer is all about understanding the rules that banks use to decide whether to pay up or not. All right, so here's our game plan for today. We're going to walk through this in 5 clear steps. First, we'll dive into that core promise, what a complying presentation really is. Then we'll look at how a bank actually examines all the paperwork. After that, we'll get into a crucial idea about context versus identical data. Next, we'll cover what happens when things do go wrong. And finally, we'll clear up what actually counts as an original document versus a copy. By the end of this, you'll have a solid grasp on how this all works. Okay, let's jump right in with our first topic, the core promise. Everything in the world of letters of credit really comes down to this one single idea: making what's called a complying presentation. If you can get this one part right, you're on your way to a smooth and successful transaction. So, what is a complying presentation? Well, think of it like a 3-point checklist. When the seller submits their documents, they have to tick these 3 boxes. 1, the docs have to match the terms laid out in the letter of credit. 2, they have to follow the rules of UCP 600, which we're talking about today. And 3, they have to line up with what's considered standard practice for banks around the globe. If all 3 of those things are good to go, the issuing bank must pay. And that's the key. It's not a suggestion, it's a rock-solid obligation. Now, this quote right here, this is probably the single most important principle you need to understand. Banks check the paperwork, not the product. This is a huge mental shift. It means even if the actual goods that were shipped are damaged or the wrong color or not what was expected, if the documents are perfect and follow all the rules, the bank still has to pay. Their entire decision is based only on what's written on those pages. Okay, so we know what a bank is looking for, but that brings up the next logical question, right? How do they actually do it? Who's in charge of the checking? What standard are they held to, and how much time do they get? Let's break down that process. You might think it's just one bank doing all the work, but a few different players can be involved. It could be the seller's bank, which is called the nominated bank. It could be a confirming bank, which is one that adds its own guarantee to the deal. Or it could be the buyer's bank, the one that issued the credit in the first place. But here's the most important part. It doesn't matter who is checking the documents. They are all playing by the exact same rulebook. Now, you're going to hear this phrase, on their face, a lot. And it means exactly what it sounds like. The bank only has to review the information that is presented right there in the documents. They aren't expected to be detectives. They're not going to call the shipping line to verify a container number. They just look at the paper in front of them and decide if it appears to be compliant on its own. And they don't have all the time in the world to do it. The rules are super strict here. A bank gets a maximum of 5 banking days to examine the documents and make a decision. That clock starts the day after they receive the paperwork, and it's a hard deadline. And it's really important to remember, this is just the time for examination, the window to say yes or no. It's not the deadline for when the payment actually has to be settled. Okay, this next part is where things get really practical and, honestly, pretty interesting. See, in the past, the rules were incredibly rigid. Data had to match perfectly, letter for letter. But UCP 600 brought in some much-needed common sense with something called the not in conflict rule. Let's look at a perfect real-world example. Say the letter of credit requires U.S. raw cotton, but the invoice that gets submitted says American raw cotton. Now, are those 2 phrases identical? Nope. But do they conflict with each other? Absolutely not. UCP 600 basically says, hold on, everybody in business knows these mean the same thing. This shouldn't be a reason to reject the payment. And this is the official principle behind that example. Banks are told to read all the data in context. They're not supposed to look at one word on one document in a vacuum. Instead, they look at the whole package, all the documents together, and ask, does this all tell one consistent story? It's a rule designed to stop rejections based on tiny little technicalities that don't really affect the deal. But, of course, sometimes there are real problems with the documents. What happens then?
When a bank finds a genuine issue, a discrepancy, it can refuse to pay. But, and this is a big but, it has to follow a very strict procedure to do so.
When a bank refuses, it has to send a single notice that does these 3 specific things. First, it has to state clearly that it's refusing to pay, no vague language allowed. Second, and this is so critical, it has to list every single discrepancy it found in that one notice. It can't just list one problem and then come back later with another one. And third, it has to tell the presenter what it's doing with the documents. Is it holding them, is it returning them, or is it waiting for further instructions? Now, the bank does have another move it can make. It can go to the buyer, the applicant, and basically say, hey, there are some errors here in the paperwork. Are you willing to overlook them and let us pay anyway? This is called asking for a waiver. But, and listen closely here, doing this is the bank's choice, and it does not stop that 5-day examination clock. The timer is still ticking for the bank to make its final decision. All right, we've made it to our last key topic. This is all about the documents themselves. Specifically, let's talk about originals versus copies, because under UCP 600, what actually counts as an original might be a little different from what you'd expect. So what really makes a document an original? Well, UCP 600 is very practical about this. First, you have to submit at least one original for every document that's required. And a bank will consider a document to be original if it just looks original, if it seems to have an original signature or a stamp or an official mark from the company that issued it. This is a big deal because it means a document doesn't actually have to be labeled original to be accepted as one, which solves a lot of old headaches. So there you have it. From that core promise of payment to the 5-day examination clock, the common sense not in conflict rule, and all the way to what counts as an original, we've really unpacked how a complying presentation works. It's a system built on documents, yeah, but it's guided by real-world context. So the final question is for you. Now that you have a deeper understanding of these rules, how is that going to empower you? How will it help you handle your next trade transaction with more confidence? I hope this has been really helpful. Thanks so much for watching. If you have any questions at all, please drop them in the comments below. We'd love to hear from you. And of course, if you found this valuable, please give the video a like and subscribe for more explainers like this one. Thanks again.